Hello, today we're going to talk about a review of the week. It was kind of a mixed week. Today it's up. Of course, it's Friday. Normally the market does okay on Friday, and that's a pretty good sign. That means that people want to hold throughout the weekend, and that maybe just they have confidence for next week. But anyway, I'm going to talk about this week and all the earnings that came out. It was a bunch of them, so I'm just going to get right into it. Google was the first company, and the stock went down a little bit, sold off a little bit on some slowing growth issues, but I don't really see that's a big problem per se with Google or Alphabet. It was some ad, so maybe it's going to Amazon or people spending less money. The only thing I'm kind of disappointed with Google is they really haven't really implemented anything on YouTube. So essentially, it's really really good, but it hasn't really fully got the full capability of YouTube. I mean, there's billions of people that watch, views on some videos. I mean, there's a lot of people watching that. They could really boost the ads on there and really make it, take it to the next level. But a lot of these stocks, the whole week, they sold off some of them, but some of them were up, a lot too. So if they run up and it's just kind of how it is. You know what I mean? It's kind of like the old saying, you buy the news and buy the rumor, sell the news. So basically, that's what kind of happens. It's a lot of profit taking a little bit. Once it goes down, people get scared and people don't think for themselves and they go start selling it off. So that's why you have like some of these bigger drops. It's not a big deal for Google. It'll gain it back in maybe a couple weeks or a month or so, and it'll keep going as long as it doesn't have any more problems. Anyway, the next company is Twilio. That I'm going to talk about. And Twilio also had another great quarter, but the stock didn't really move. But the stock kind of ran up since its last quarter, so it really just been flat. But there's no reason to really do anything crazy with that stock. I think it was still growing. I think it was accelerating growth over 81%. Top over year or something like that. So essentially, I mean, it's still growing fast, and I think it's already kind of priced in. The way it works is, a lot of people think that earnings, oh, well, if it beats earnings, the stock has to go up. I mean, well, that's not really the case because a lot of stuff, it's kind of already priced in to beat the thing. Everybody knows it's going to have a good quarter. So essentially, sometimes they go run up thinking they will be better than expected, and sometimes they go sell off just because they go sell off. So there's really no reason predicting. A lot of things in the stock really kind of moves just to move. I mean, sometimes it might be. I mean, if there's high volume, it might be an insider selling. Essentially, if you have a big company run up, maybe you go sell off. It's really almost impossible to predict what these things are going to do on an earnings report. You just kind of look at the numbers. You don't really judge us. You don't judge on the stock on the way it moves after a report. It really doesn't really matter. It's good to listen to it and see what's. It's good to keep updated with them and see what they have to say about it. But it didn't really move at all. It just kind of stayed flat. So moving on to the next one, Shopify. Shopify was a lot of growth with it. It did well. I think they raised it, so it was like 50% growing, or so they raised it. So normally when companies raise their guidance, because a lot of these growth companies, it's really not about their earnings now, it's about the growth, and that's how these valuations get, let's say it's a $20 billion company. If it increases its growth, it basically and that's what the guidance is. So really, it's not really about the earnings this quarter, unless it completely messed them up. But when it raises its guidance for next year or the next quarter, that's when the stock gets lifted up on these growth, because then you have to price in the beat here and that, so it'll push it up even higher. And next company is MasterCard. It was really no big run up, no big. I mean, it had a great quarter like it always does. It's doing well, and it's just nothing really changed there. The story hasn't changed or really anything. So the stock, I think it went up about 3 or 4% on the news, and it was a pretty good quarter, really solid. Next, we're moving to Square. Square is one of these companies I thought it could bump up, but in all of these things with the guidance, it didn't. It actually kind of went down a little bit, which I was kind of surprised, but not really. I understand why it did, and it was lower. It lowered its guidance, and it's one of the things where a lot of these managers and these CEOs they go lower guidance so they can beat their earnings next thing, and that's what a lot of these companies do. And Square has been one of the companies that always seems to lower guidance and blow away the expectations next time. So essentially, and it's just kind of how it is as a manager. I mean, let's say you have a quick moment to explain. Let's say you have a lemonade stand and you're expecting, let's say you sell 120. Is it better to expect you're going to sell 120 and then sell 120, or is it better to kind of caution yourself and say, well, we're going to only sell 100? So, I mean, essentially, that's kind of what you're trying to do. And you kind of maybe you won't sell that many. So you're thinking, well, we go back off a little bit. We go back off. Maybe we go say we go only, let's say we were going to actually, but we don't think we go meet that mark. So you kind of lower it. And it's kind of better as a manager way to, it's better to, under promise and outperform than the exact opposite. So essentially that's what kind of a lot of these companies do. It's better to kind of lower expectations than beat them. And it's just how you really should look at money. Like let's say you're budgeting in $1,000, it's just good money sense to do that. It's better just to you got to meet your expectations, of course, and don't lower them so much that it's not really a challenge and you don't really push yourself to beat them. But it's better to go, I'm going budgeting $1,000 this month and then have only spend $800 or whatever. It's better because then you have a surplus of $200 that you could, but it's better, if you do the opposite. It's just how really it kind of works. So guidance, it's kind of bad and it hits the stock a little bit, because it is a growth stock. But anyway, moving on to the next one, Skyworks Solutions. Skyworks Solution is, Skyworks Solution. It's a chip manufacturer. It really wasn't a whole lot they said about it. It's really just a 5G play. So essentially, until 5G comes out and really does a big move, 5G, it makes a lot for your smartphones and stuff like that, and a lot of other things. And a lot of other smart devices. So essentially, if it makes all the chips, it's really, that's what this company is. So it's it had an okay quarter, but it's really looking in the future for that one. So essentially, the next one is Arista Networks. So Arista Network actually got hit pretty hard. I think it was the hardest one that I recommend. It got hit the hardest, and for some reason, and it's I think it was a lot of profit taking. The stock was up over 52%. Year to date, so it's a lot of profit taking, and once them stocks they sell off maybe about 5 or 6%, everybody just could start rushing off and selling it, and it's just how it is in some stocks, because it beat revenue, it beat basically everything, and it lowered its guidance and stuff, and it beat every single expectation, and the stock sells off 20%. So essentially after hours, and it's really not very, maybe I should make a video on after hour trading and why you shouldn't really do it. But anyway, that's what happened to that stock. It got hit real hard because, it's not a growth stock and it ran up 52%. So people just cash out, it went up, I think it was like 200, then went all the way up to like 300. So people just cash out of it. They go, you know what, I'm out. And, they just let the stock get crushed, and as simple as that. And they really, definitely not a long-term focus there. So traders, and it's just how the market works. You have long people, you have people that go long, people invest in, some people just trade it and make a couple, they might get in when it's getting good and make a little bit of money. Then as soon as them earnings report comes out and it's not going to go up, they sell it off, and that's it. So essentially that's what happens. That's why you have to never really sell out for a big crash. Just kind of get the news, because now actually I think it went down to 20%. Now it's back up to, I think it's only down 10%. So if you were sold out at the bottom, you have to wait till it kind of bounces a little bit, because then it gets sold off too much, and then people can buy it back, and it's just the way the market works. So essentially, but moving on to the next one is Activision Blizzard, which there's nothing. I kind of expected nothing from this company. It was hit real hard. It's definitely looking forward. You have to look forward on this stock. It's at least you're gonna hold it for 3 years, or you don't hold it at all, because I don't see in the near term it's gonna really be amazing performer. But I think in the long term, I think video games is a growing industry, and I think Activision is one of the best. So that's why I hold that and recommend it. Zandex is the next one. It's another cloud play, and the stock sold off. It beat expectations. One of these other stocks, it ran up. I think it almost doubled from the bottom. So I mean, it's going to sell off a little bit too. As simple as a lot of these growth stocks, they sell off. If it doesn't blow it away, people get out, and as simple as that. And it's one of these things. A lot of people load up before earnings, and that's just how it works. They think, oh, once it hits this earnings report, it's going to blow it out, and it's going to jump 10%. I'm going to make, let's say you put $10,000 in it, or $1,000 or whatever, it goes up 10%. You made $1,000 in a couple seconds, and then sell it off, or a couple minutes, or whatever it does in after hours or whatever. Then you sell it off, and you're happy you made $1,000 without doing anything, and or $100 or whatever you put in there. And that's what happens. And if it doesn't do that, it just sells off. And once it sells off, it just sells off. I think it only went down 5%. I think it gained majority of it back. So, that's just how the stock market works. A lot of these companies, that's what happens. They're but really nothing that I see. And then Apple's the last one. Apple is one of these ones that I wasn't surprised. I think Apple's a great company. It's doing well. I think I think they're doing great, and I was really looking for China and all the stuff going on there, and they say they're doing better in China. So, absolutely. So that's about really all. I think some of the themes stay the same on all these stocks. So I mean, earnings season. That's why I never really recommend buying before the earnings, because God only knows what could happen. I've seen stocks that look really, really good, do really, really, then it's a god-awful report, you know what I mean? And you don't want to, I've seen stocks go down 50, 60% because it was a couple weeks ago, months ago, it was Stamps.com. It ran up, and then it was something that they just kind of unveiled on their shareholders. They sold stamps online, and they stopped doing the deal with the post office, so it just crushed the stock, and so... these earnings report, that's why I don't recommend buying them, because you really never know about them. So, but really nothing's really changed. I still recommend all of these. It's good to check in, but I don't really check in them too much. I just kind of let them do whatever and let them grow. And as long as they keep going, I keep recommending them. But anyway, that's it. Thanks for watching this week, and earnings seasons kick off again next week, and I can make a video of my opinions next week. And really, that's it. Thank you.